Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com. And in this video, I'm going to look at the pattern that I've been using to trade AIG. If you went to our webinar last night or earlier this week, depending on when you are seeing this video, then you're going to recognize this pattern. And I'm actually doing this as a follow-up to that webinar. So if you haven't seen the webinar, maybe I'll put a link at the bottom of the page. It'll be up for a couple days, and then after that it'll be gone. So if you're seeing this in the future, maybe the webinar no longer exists. But if you're seeing it right now on May 21st or 22nd, it will still be there. Please check it out because I talked about AIG in the webinar, and we taught you how to trade this particular pattern. But before I get to that, if you're just finding us on YouTube, please make sure that you sign up for our channel, and also check out marketgauge.com/tutorials, where you'll find more videos like this and a whole bunch of resources for identifying great trades and market analysis. Additionally, I want to make sure that you know you can see this in HD, high definition. So down in the lower right hand corner, there's a setting, that little gear icon. Flip on that and you'll see HD as an option. It'll be much clearer. I think you'll like it much better. So with that, let's get started with the video. Now, as I said last night in a webinar, I pointed out, which you couldn't really see in the webinar, that I started really probing AIG for swing trades right in around here. Now I did it because it was an inside day, and I'm going to zoom in a minute, but I really did it because, as you can see on this daily chart, AIG was on the verge of a potential huge breakout. Now I didn't know that it was going to break out. I was just anticipating that it might, and well, hoping that it would, because as you can see, it had gone from a nice uptrend to a massive consolidation, and now it was bumping up against that breakout. But I don't know about you, but I know I get really frustrated, even though I continue to trade breakouts. I get really frustrated when I buy the breakout as it's breaking out, like this one right here, and then have it collapse right in my face. So one of the ways you can avoid that is to try and get in, down here, so that when it gets up to that breakout level, you're not stressed out about whether your position is positive or negative. You give it some volatility, and if it comes back in your face, you scratch it, no big deal. And when you trade that way, it makes it a lot easier to ride the breakouts. Now, you never quite know, though, do you, when it's going to take off from just under the resistance level and start the breakout? Well, maybe you do, and that's part of what we talked about in the webinar. Right, so I don't know if I caught this one in here. I don't think, honestly, that I really had my eye on AIG until it already had made this attempt here, and then I started focusing on it. And so what did I focus on? Well, the whole webinar, or a lot of the webinar, is based on the inside day, so I'm not going to go through everything we'd look for in this quick video, because you can get it in the webinar. But here's the first example, and in this case it didn't really work out. So the idea was you're a buyer above the inside day, and I have as kind of marks on my chart, I put these horizontal dotted lines as the entry trigger, and then each one of these solid lines is one average range. So what I'm looking to do is I generally go to no loss, take a few profits at one average range, and then ride the rest, especially if it's a big breakout like this. Right. So in this case, this first attempt here, this breakout here kind of flopped, did not work, should have been stopped out down under here. But the second attempt, right, looked even better, because if you look at the big picture again, second attempt, it comes right back down to the 200, which is this gray line. The 50 is now positively sloped. You got some nice consolidation, and even better, you've got this low right in here and these lows right in here. So this whole area we know is good support. And so after sitting at that for several days, you get the inside day pattern again. All right, great opportunity to buy an inside day sitting right on support. And again, why am I focused on it? Because I believe that it could break out, and if it does break out, it'll keep going. And again, it doesn't feel a lot better if you buy it down in here when it's breaking out of these levels. You're not worried about 50 cents up or 50 cents down because it's all profit at that point, and it enables you to just hold and keep going. All right, so essentially I've had a core position in AIG since down here and added and subtracted as these patterns go, primarily because this is a major breakout, and it's really played out really well. So this video is incorporating a lot of things that I've talked about in past videos. So the first is, got an inside day here down on support. It breaks through the trigger price. You can take some profits and lock in no loss after one ATR. And then one way to ride this, and we talk about this in the course, not in the webinar, is that you can just kind of stack up your ATRs, and when you go from one ATR and retrace a full ATR back, it's time to start looking from a swing trade perspective at taking some more profits. So now you've got a good breakout as of this line, right? Then it pulls back. Now, as it pulls back, your choice whether you want to hold on or get rid of your position and wait for another one. If you did, you had another opportunity right in here with the inside day, but unfortunately, this one pokes its head up, never gets to that first easy target, and most likely stopped out right here. All right. Now, if you're in here still holding your core position, right, because you're not that worried about it coming down through here because it hasn't broken down below the 50, it's a small position, still profitable, you hold on to it. You ride this up to new highs, and then you get another opportunity right in here. Now this one again, a little bit of a head fake. You might have gotten shaken out here on the stop, but then again, another one right here. Now, here again, and this is key for any pattern, you've got this consolidation. We talk about this right in the beginning of the webinar, right? You've got this consolidation, and look where it sits, right on top of your thrust, which is the breakout, this big breakout. So look what AIG is doing. Consolidates, major breakout, pulls back to the breakout area, holds the 50, makes another thrust higher, now pulls back. Perfect, right? What I'm doing is I'm just letting the market tell me when I have an opportunity at a low risk shot on a pullback to get back in. So today, what happens? Today we actually touched the second ATR. So I didn't take profits right there. I let it roll over. All right. And I'm going to go to the 5-minute chart, and I want to show you another thing that I did with this particular scenario in here in terms of adding. So here's a good inside day. Now I'm going to call it a good inside day because it's coming after 4 days of consolidation right back on the 10 on that other area. But there were a couple of opportunities to either get in here or the breakout or even the next day, right? So if you were in the webinar and you already know all this or know most of it, and you see that you've got a breakout on this day, don't give up, all right? Because if you've been watching my other videos where I talk about buying near the low of the day, look at where this thing stopped the next day. Came right back down. We'll look at it on intraday and stopped where? At this level, right? That's the level you'd expect it to stop. And actually, we go into more detail on that, quite a bit of detail, where to look for the retracements in the course itself. We won't see that in the webinar, but you will see that in the course. So if you like the webinar, definitely sign up for the course. But let's go to the intraday. So I'm just going to look at the 5-minute, and the time frame that I want to focus your attention on is right after the inside day. Let's do this. All right, so our inside day here is on the 18th. So we're going to look at the 19th and the 20th, right? Because once it takes out the highs of the 18th and the 17th around that 59.07, 08 level, that's your indication that that's your entry trigger, right? So if we take a look at the 19th, I want to show you a way to kind of cheat it, get in a little earlier with some opening range and some reversal patterns, simple reversal patterns just based on the 5-minute chart, which I've taught recently in these same free videos. All right, so here's your inside day action on the 18th. Right, you get this large spike on the open on the 19th. Right, now our level, our key level was at 59. This is saying 06, but this is that high we want to see it break. Now it breaks it for a nanosecond on the open, but when the market continues to trade, look at how it trades. It establishes a if I avoid that big spike, it establishes a range right underneath that high that we're looking at, the two highs that we're looking at, and it puts in that higher candle close off of the opening range low. This means I've got a really good stop that is literally, if I'm just taking a quick trade here, let's say I'm a buyer over like 59.08, maybe even spent, I think I actually paid 59.11 just to make sure that it was breaking. But my stop was down under here, which is much less than 1 ATR, right? So the add on my position, so when I tell you later in this video that I'm selling some off, this is the stuff that I'm selling off, stuff that I bought here, so I had a risk of about 50 cents, a little bit less than 50 cents on an average range of 80 cents. So it's, just over half an ATR. And I just took out 2 ATRs. So it's almost 4-to-1 in 2 days. And that's the objective. That's how you put all this together. You've got the daily pattern that just makes a lot of sense. You're in through that high and use the opening range low and the low of the day as a good stop to tighten my risk. And it's kind of off to the races on an intraday basis. Right, so the next day, as I was saying, and let's just a reminder, so then it closes higher. Now a lot of traders would look at this breakout and say, oh man, I missed it. I don't say that at all. I actually look at this when I go through the charts at the end of the day and say, okay, great, this is demonstrated, it's got the strength, it's broken out of the pattern. Now, if this thing comes back and retraces to the areas, a couple areas that we look for it to hold support, that's when I look for a reversal. And one of the ways to trade that reversal is a simple way that I've shared with you guys here, is to look for that 5-minute bar that comes down near preferably the low of the day. Oftentimes you want to wait for the first 30 minutes, but in this case you've got an active pattern going. It's sitting right at the prior day's high, and you get the reversal pattern right in here. Guess what? That's only 59.20, so even if you bought it here and had your stop, the same stop that I would have had the day before, but now that stop's actually the low of the day, that's a great entry, and now you're not buying it up in here, and as you can see, in just the 2 days, you basically get your 2 ATRs. Now, in the case of me, where I'm in a little earlier, my objective here, so if I'm buying it here, I've got 1 ATR right up near these highs, so that's a good place to just let some go and then move to a no loss up here. And then today, it gets up to the 2 ATRs. Now, the 2 ATRs was around 60.60. So look what happens around 60.60. So we had a nice breakout today of the opening range. Markets didn't do a whole lot today. I'll show you the markets in a minute, but AIG had a really nice day up to here, and then we see this big day. It looks like everything's going to be just absolutely on fire, but unfortunately it reverses. Now, one of the methods of simple trailing stops that I like to use is that if you look at the low of the bar that made the high of the move, and then you base your stop on that low. There's a bunch of nuances I can't go into in this quick video, but so instead of just selling out at the 60-60 level, which was the target, I wait, because sometimes it just keeps going. I'll show you another example of one that did that today for me. So I wait and I give back a little potential profits by having to sell it down here. But if we look at the whole picture now, it means that I'm in way down here on the initial entry, and I'm adding maybe a little in here, getting stopped out of the ad here, adding again here. If I missed that, adding here, if I missed that, I could have bought it down around here because of the opening range reversal, and then 2 days later, I'm taking some profits at 2 ATRs. All right, so I know that's a lot. It incorporates a lot of the stuff I've been talking about in these videos. I know you can't go back and look at all those videos because we only show you the top 5. So when I send you these videos, if you like them, watch them so they don't get pushed beyond the top 5 and you can't see them anymore. And as kind of a bonus, that little trailing stop, when you hit those ATR targets or those percentage targets, whatever you're using, sometimes it makes sense to just ratchet your stop up really tight below that high bar, and sometimes it'll just keep going. Just as a side note, so I've been all over NXPI, mostly because this is one of the ones that's in our NASDAQ 100 portfolio right now. So I know it's a great one to look for day trading and swing trading opportunities. Saw it come down today and get to the bottom of this range. So when it does that, I look for the reversal pattern, right? So same old reversal pattern. So check out how that worked today. So here's today's low. You got the reversal pattern, and I entered right after the reversal pattern, and essentially I entered around 50 something, 102.50 something. Mostly because it came through here, right? So right on the close. I didn't wait for a confirm. I just entered at 53 because I like to use threes. And then my stop was below today's low, which was 101.53. So I had about $1 stop. This thing's got an average range of like $3 or something. And so my point in even coming here was that originally my target was about 1.5 times my risk, which would have been around 104, right? So because I had gotten in so well, I decided to be a little more lenient on the target, and rather just sell against that target, I wanted to see a lower candle close, a reversal of the pattern that I was buying with confirm. So I got the lower candle close here, decided I'd put my stop right in there. For selling out part and then going to no loss. Well, guess what? I never got hit, so now I've got full position, not taking out any profits. And since it had broken out, and I'll show you the daily chart in a second as a reminder. Once I had that breakout, I knew I might have a big one here, and so I just put my stop back under what should have been support, and then I would have been getting out basically on my profit target right at my original spot. So sometimes you get lucky if you just use that trailing stop, and sometimes you get really lucky and you never got out of anything. And so there's a 50-cent risk, or sorry, a $1 risk. 102.50 closes almost at 107. So you do the math. That's like 4 times, 5 times the risk. Now, the reason that happened, quite frankly, is because I was in the right stock at the right time. And I admit that I know this is a great stock because we have it in our NASDAQ system portfolio. But even if you didn't know that, buying a stock near the low end of the range that's consolidating the way it has been consolidating. I've been on it. In fact, I bought some in here and wound up scratching it the other day, even taking a small loss on my ad because of what? If you watch the webinar, inside day. And so when I saw that action with this volume, I knew this thing had the potential to come right back. And I got lucky, honestly, that it came back to this low level, gave me that opportunity. But I made my own luck, right? Because I knew the reversal pattern, I knew the daily pattern, I trailed my stop, and just wound up being in the right place at the right time. So sorry for the length of this, but I hope that helps. And if you haven't seen the webinar, or if you did, I hope that AIG explanation broadens out what we talked about in the webinar. And I hope this helps in general. And I'll see you in the next video.